Meanwhile, the pain is being felt by Chinese youth, with unemployment hitting the highest levels in the post-pandemic times. According to reports,
Hello and welcome. You're watching BTTV. This is Market Today. I'm Tanya Aneja and with me is Shail Bhatnagar, our markets editor. Well, it was a week of flat trade dominated by events for the Indian markets. But what should be your strategy going forward and where are the markets headed? We'll discuss this and lots more. But first up, the top headlines for you. Indian stocks may resume their upward trajectory after US inflation data came below expectations and the local central bank RBI held rates steady. Bulls are likely to resume command on the Lal Street after a week of flat trade dominated by events. Keep an eye out of the already red-hot PSU stocks after Prime Minister Narendra Modi gave a thumbs up to sizzling returns and nudged investors to look at them as an investment theme. Good morning, Shail, and well, what a week it was. Street clearly, didn't like the imposition of incremental CRR, but thank God it's Friday today. So where do you see Nifty and what should be the strategy ahead of RBI's monetary policy? Because I think I'm in a Friday mood, but what about markets? Are they, gonna be in a Friday mood too?
Good morning, Tanya. I think you summed it up in one line. Thank God it's Friday.
Yeah.
Everything that was, holding back the index has now seemed to have settled in favor of bulls. Firstly, good morning to you and to everyone who's watching us. It's a beautiful Friday here in Delhi, and let's hope the same kind of sentiment is reflected on the Lal Street. Let's just sort of, decipher the market in hindsight. Over the last 1 week, nothing has happened. The market is flat out, nothing on the Nifty except for one major thing, Tanya, and that's that 19,500 has been repeatedly tested and repeatedly held, which basically means that it has emerged as a very strong support. Now, two major events were slated this week. One was the RBI credit policy. It's passed off very peacefully except for banks, which we'll discuss a little later. And the US inflation data, the stamp is below forecast, which is good. So it basically means that the market correction that's happened from, say, 20,000 on the Nifty to about 19,500, and 19,500 has been repeatedly held. I would presume that given that a new weekly expiry has taken root, we just might see positivity coming out on the Nifty. So once you see the daily chart, you'll realize that apart from apart from 19,500, what's really essential is that the 20 DMA has also been held. So two positives: US inflation data below expectations, RBI has not made any change in interest rates, 20 DMA is held, and 19,500 has emerged as a strong support. So both the Nifty and the Bank Nifty are in a narrow trading zone, and therefore I presume that since all negatives are out from the market, today might be a day when you start to resume your upward trek, no matter how small it might be. We are not getting any great cues from Wall Street. In fact, late very night, say something like 11 o'clock when I checked the Dow index and all, they were up 400 points, 130 points on the Nasdaq, but over time they've slipped. You'll give more details on those data, but they've ended in the positive, and that's good enough for me. So these are what my expectations are. As far as the option change is concerned, 19,400, 19,500 are very, very strong supports in terms of option writing for the Nifty. and 19600 is emerging as a resistance. So the range is continuously narrowing, Tanya, and one day it will either break out on the upside or break down below. So this is what needs to be done on the Nifty. Buy on dips. That strategy is working. If you see a gap down, let it settle till first support or second support and then step into it. Tanya.
Okay, absolutely. That was Nifty data for you. But let's talk about Nifty Bank also, Shail. Shares of Bank, they tanked on Thursday in a reaction to the RBI's move to impose an incremental CRR as part of its attempt to drain out, additional liquidity of over 1 lakh crore rupees from the system. So the decision could impact banks' net interest margins in the short term. I have been talking to a lot of experts and they have been saying this. But what are you looking on Nifty Bank today?
So you have this daily chart in front of you, Tanya, and it's absolutely right. Banks are sulking, and the interim cash reserve additional CRR that has been imposed on the liquidity which has seeped into the system because of the return of the 2000 rupee notes is what is bothering the RBI. It's likely to mop up this additional liquidity by interim CRR, and that's the reason why you see Bank Nifty falling somewhere like 340 points yesterday to 44,500. If you go back in time, all through the recent 1 week, I have been saying repeatedly that 44,500 is a support that is emerging from the Nifty Bank. It's been repeatedly tested. The index closed near its day's low yesterday, sulking as it were. And also, this is the lowest level that you've seen somewhere around June 30. So, Nifty Bank is weaker than Nifty. There was just one gainer in the banking index yesterday, and that too is nothing to talk about. So Axis, ICICI, HDFC Bank, State Bank of India, all of them are in sulking mode. Given the options chain statistics that I keep on watching on a fairly regular basis, the immediate support remains 44,500 and then 44,200. So I would just say that avoid the Bank Nifty, do nothing. Focus on the dip if you get it on the Nifty, and if you're already invested at 19,500, let's hope you make enough money today to pay for the party today evening, where Tanya and I will come and attend. Tanya.
Absolutely, Shail. I'm also looking forward to that. But what are you looking at in the F&O space today? Because I'm very sure lots of lots happening there also in that space.
Yes, absolutely, Tanya. So as has been the case over the last a week or so, where indices have either remained weak or flat or have consolidated, but the F&O and broader markets like the pharma index, the PSU banking index, and so on and so forth, the CPSE index, have had a party. Let's not sort of take it away from them. The party is getting better and stronger. So the stocks that I'm looking at over the last 2 days, you and I have been talking about the cement space. So it seems that the leadership has moved to cement, and one particular stock here is India Cement. I would again like to highlight it. Remember, from I think Tuesday onwards, the stock had started to bounce from its 200-day moving average, and after 2-3 days of gains, the sentiment remains strong. Delivery statistics are pretty good, 22% higher on Thursday compared with Wednesday, but it's the open interest. This is where the speculative bullish fervor is getting reflected, is up 16%, and of course the price has jumped in sync about 5.3%. India Cement was one of the top gainers in trade yesterday. Apart from India Cement, there are old favorites, Max Financial up 8.3%, fresh record high here. The delivery statistics are beyond wonderful, up 28 times, and the open interest is up 16.
Check your WhatsApp.
Plus price, plus open interest, plus delivery, plus record high. So that's what is happening as far as MFCL is concerned. Then the old favorite, Canfin Homes. You remember there was this talk of a 35 crore rupee mismatch in some kind of a corporate issue. So this stock is coming back very strongly. 21% higher on open interest and a 2.5% higher on price. Most likely, Canfin Homes is in the middle of a swing trade, and it will reclaim its previous highs of 850 plus probably fairly soon. Tanya.
Okay, absolutely, Shell. And let's talk about the global markets as well. So, US stock futures inched up on Thursday night as traders mulled over the July consumer inflation report and looked ahead to wholesale prices data. And so, if we talk about Dow Jones, it rose by 38 points, S&P 500 futures and NASDAQ also. They were up to the tune of 0.1 and 0.2%. But what are you looking, as far as the overseas cues are concerned, and what to really track from that cues?
So, Tanya, I think I was personally a bit disappointed given the fizzling out of a very, very strong rally that came into Wall Street post the less than expected inflation. But, people make money, book profit, and then they come up with a reason to explain that. So, the explanation was that inflation data is fine, but core inflation is a bit worrying. So, after having watched markets for 27 years, my feeling is that these fellows give reasons unnecessarily to trouble the retail guys like us. So let's ignore it. Again, crude is what I'm watching. Crude oil at about highest level over the last 15-16 months. Let's keep a watch on it. It's slipped a bit over yesterday, so that's fine. That's the only global parameter that I look at, except for the headline statistics on the Dow and the Nasdaq. So it's good sentiment coming in from Wall Street. हम लोग अच्छा सोचेंगे तो अच्छा होगा, Tanya.
Absolutely, Shell, you said it. And what about the sectors? Which are the sectors you're bullish on today, and which are the sectors one should avoid? Because I think banking sector, that was in focus yesterday. But what about today?
Sometime later in the show, we'll play a bite on what Prime Minister Narendra Modi has said about the public sector stocks in Parliament yesterday, and you very rightly encapsulated it in the headline that you mentioned. So I would presume that PSU stocks, PSU banks in particular, PNB is what looks good. I would feel that cement is now perking up. So front lines will outperform, and high beta there is of course India Cement that we've talked about. I expect Ambuja ACC to also do well given the statistics that have come up in the F&O trade. So it being Friday, Tanya, I would imagine even traders would be in the Friday mode and would pause a bit. So let's stick with PSU banks and cement in terms of a sectoral play. Tanya.
Absolutely. So let's talk about some other news. So Air India on Thursday unveiled its new logo, replacing the previous wheel of Konak, and the company said that it is a total and complete transformation of Air India, and it is not just a changing of the brand. My colleague Karishma Sudani caught up with Campbell Wilson. He's the MD and CEO of Air India. Listen in.
For the consumers who are looking to fly Air India soon?
Yeah.
Passengers of Air India.
So as I presented earlier on, we are undergoing a significant product upgradation. We are improving the website, we're improving the app, we're improving the loyalty program, we're improving the meals, we're improving the seats, we're improving the in-flight entertainment system. It is a total and complete transformation of Air India. It is not just a changing of the brand. Now, of course, this takes time. As Mr. Chandrasekharan said, it is a big project. There are a lot of moving parts, but we're absolutely committed to the transformation of Air India. We're investing a lot of money, a lot of time, a lot of passion. There are more than 20,000 Air Indians hard at work in this transformation, and we're absolutely committed to make it successful. Please bear with us as we go through this process. If we could do it faster, we would, but we're doing it absolutely as fast as possible.
A word for the consumers who are looking to fly Air India soon.
Yeah.
That was Mr. Wilson for you. And now we also have with us our market guest, Mayuresh Joshi. He's the head of equity research at William O'Neill India. Always good to have you, Mayuresh, on the show. Very good morning. And thank you so much for taking the time out and joining us here on Business Today Television. And, Mayuresh, yesterday we saw, Street clearly not liking that imposition of incremental CRR. But what do you make, of that announcement and the policy, and where are the, Indian markets headed according to you?
Very good morning to you, and morning to Shail sir as well. So I think two aspects here very, very clearly. One, in terms of the policy positioning itself, in line as far as the rates were concerned. Commentary was expected to be a little bit hawkish, considering the transitory effects that we've seen of tomato and onion prices on food inflation. But a large part in terms of the governor's speech was indicating that it might start tapering down as we head into the next few months. Having said that, the two things, as you rightly pointed out, that spooked the market to a certain extent. The incremental CRR requirements that will come into effect in the next few days. But again, I think that is expected to be a very temporary phenomenon, because you've seen a lot of 2003 notes come back into the system itself. Liquidity is abundant in the system as we speak. And with inflation, specifically global supply chains still having issues, the uncertainty related to El Nino in the next couple of months might actually spurt up inflation to a certain extent, which RBI has pointed out, from 5.1 to 5.4. So as a safer side, I think sucking out the excessive liquidity into the system without causing any harm, because if you probably look at the press statements by the Deputy Governor, they said there is still enough liquidity for lending to probably continue in a very, very structural manner. So I don't think that the incremental CRR is going to create a huge amount of issues as far as it's concerned. To that extent, I think it was a very well balanced policy. I think the street will take that in its stride and then move ahead.
Right. Mayuresh, good morning. And you very succinctly put in that it was a fantastic policy, except for the additional incremental and interim CRR. There's nothing that you could find fault. In fact, the Reserve Bank of India governor mentioned quite a few positives about the Indian economy relative to itself 6 months ago. And of course, given the pain that we see globally, both economically and politically. Let's now focus on how you see portfolios shaping up. If one by one you could share your picks which you would want to add in the portfolio at current levels, it would be wonderful, Mayuresh.
Absolutely. Morning, Shail sir. So two aspects here. One, in terms of what we are looking at Marketsmith India, one of the stocks within the broader markets is Kirloskar Oil Engines. If you look and deep delve into this company, one of the largest producers in terms of generator sets across power outputs, so from 2 kVA to almost 1200 kVA. So it covers the entire power output that we can probably cater to. The second aspect obviously is numbers itself. Now, if you probably look at the top line for the quarter one, right, numbers just came in yesterday. 1,500 crores in terms of top line, much better than what the street expected, and much better in terms of both YoY and quarter-on-quarter performance. This has got replicated across to its bottom line. So I think EBITDA margins have expanded year-on-year, quarter-on-quarter on a standalone basis in excess of 12.5%. The bottom line growth has been substantial for the company in the quarter gone by, at 125 odd crores compared to what probably did last year, and even a better performance quarter-on-quarter as well. So the consolidated EPS has come to almost 9 odd rupees. They had done almost 24 rupees last year. So if you go on an annualized basis, looking at how Q1 is expected to how Q1 has performed, now the rest of the quarters might be, Q1 expected to be one of the weaker quarters and substantial performance here on. So second half recovery can be extremely substantial. So my own sense is an EPS of 30 to 35 not ruled out. And therefore on market Smith, both the EPS RS rating looks extremely positive. Debt is very, very minimal onto its books. Whatever debt is there is related to the new financial services part that they're probably servicing at this point of time. And therefore, with the dividend yield of 1.25, this looks very, very attractive. So we're looking at an 18-20% upside. We do keep stop losses, as you know. So I think the stop loss is placed at 418,420 for this one. The other one that we like, Chelsea, is Indigo Paints from the Paint.
Mayuresh, let's discuss KOEL first, and then we'll get to the next one.
Sure.
The stock already is at a record high that you see, but nothing much has happened on Kirloskar Oil Engines. If you look at the 10-year performance, is actually underperformed both the Sensex and the BSE Small Cap Index. It's just compounded at 11% over the last 10 years each year. So the stock might be at a record high, but remember, it's the infrastructure capex cycle that is kicking into the economy, and it is stocks like KOEL, when given a very nice tailwind of their earnings, are likely to outperform. Mayuresh, is my thinking right as far as KOEL is concerned? We haven't seen anything happening over the last decade as far as the stock price is concerned, but better days ahead.
Oh, absolutely. You're bang on the spot, and the entire logic probably just translates both in terms of their capacities that they have at this point of time, and the entire power chain is going through a huge amount of transition. Now, a lot of power stocks have probably moved across the chain. So whether they are generators, transformers players, whether they are transmission players, or even the EPC guys. To a certain extent, I think this is one of the backbones that is probably required for the entire power infrastructure as a space. And both domestic and export markets are holding extremely well. In fact, the best part, Shelter, about this stock is that with the new emission norms that are kicking in, the CPCB norms, as we call it, emission 4, this company is fully compliant across its value chain, where no other company in the Indian ecosystem is probably present at this.
And the interesting part, Mayuresh, just I was drilling through your Market Smith India website, at where you so ably head research. The 10-year PE, the average 10-year PE and the current PE of the stock is 17 and 19 respectively. So there is really no, how should I say, exuberance in the stock, even if it is at a record high. So probably any dips here should make it all the more attractive. Coming to the price to book, 10-year median is 2, and at the moment the stock is at 2.9. Again, nothing out of the ordinary when it comes to roaring valuations that we see in some capex stocks as far as that particular sector is concerned. So Kirloskar Oil Engines, Mayuresh, before we get to the next one, would you hazard a guess, given things remaining same, our defense is ceteris paribus as it is in economics, where would you see the stock 1 year from now?
I think the minimum target is the highest test score that the highest score that Lara has done, 501. So I think that's the minimum that you are probably looking at sales. So just to have a cricket correlation put in. I can't debate with you on economics, so I think I'll try to put my cricket dynamics in.
Okay, so 500 for what is better known as Koel in the markets. Let's hope you listen to beautiful music on Kirloskar Oil Engines. Mayuresh, the next one, where do you see good color coming in?
Oh, absolutely. We do like Indigo Paints. Obviously, crude prices have moved over the last few weeks, but it is not a structural move as we see it. And therefore, I think the apprehensions that market has got that crude might move significantly from here, creating a dent in terms of input costs and therefore earnings for paint companies, is unwarranted at this juncture, really. Because paint companies have taken, to a large extent, price hikes. They might not roll back their price hikes if crude remains in the same fashion. And the expectations in terms of volume growth, Shells, are specifically in the second half, as festivities will start kicking in, is expected to be significant. For Indigo in general, I think 27-28% in terms of volume growth compared to an Asian Paints at 8, Kansai and Aerolac at 5%. The addition that probably happens in terms of their volume growth is the value-added products, which is almost 34%. So the cement paints, the ceramic paints that it has got, the wood surface paints that it has got, is something which is unique in the paint industry itself. And they have been growing at a humongous pace. The company is also stating that July, until we speak, has been extremely positive for the company. First half is normally very, very soft, but it has turned out that first half has turned out to be extremely strong for this company in general, and an even better second half will mean volume stroke value growth will be significant going forward. Top line growth significantly higher, gross margins at 46-47%, the best in the industry. EBITDA margins at 17.5, expected to remain stable or even improve going forward. Putting up a couple of plants, water-based and solvent-based, in the next few months, that should aid volume growth going forward. And not substantial amount of debt in their books makes it a very, very compelling case as far as Indigo Paints is concerned.
Absolutely, zero debt on Indigo Paints. And what's really interesting is that after hitting a substantial high of about 2,500 rupees, the stock is trading in the vicinity of 1,500 rupees. And that's also the IPO price of the company, which was something like 1490, 1488. So nothing much has happened in terms of corporate developments and corporate performance. Maybe from here we'll see a nice uptick when it comes to Indigo Paints. But Mayuresh, pre-open markets are with us, and the Nifty is opening with a 63-point uptick when it trades initially in the pre-open segment. Let's see stocks that are buzzing in the green. Not many that I can make out, so this is obviously a negative feint that's coming up. Okay, Axis Bank in the green, 966. 944.95, and ICICI Bank also in the green, 966. There's nothing much to report. Hero Motors continues its upward trajectory, 1.5% higher, 3,080. Power Grid, PSU stocks, like I've said, 1.3% higher, 245. We have Tata Steel, 0.8% higher, 121. Let's move to the F&O Nifty now, flat to red, 19,536 minus 5 points. Let's see. Yes, RECL 4.5% higher, 226. So it's going to be a PSU rally today, Tanya. Apart from REC, I see Power Finance Corporation 1.5% higher, 271. Nifty now down 58 points, 19,450. This is not proving to be a great Friday, but let's see how F&O settles. These are erratic rates, not much to be trusted. In fact, it's now slipped 188. So let's ignore it completely and shift focus to the cash segment. So NBCC 5% higher at 50 rupees, SGVN 3.8% higher, 56.50, and of course I am seeing some kind of attraction coming in only in PSU stocks. We'll try and get you Mr. Modi's small inputs on the PSU sector while he was in Parliament, but that's how it is. Nifty now clinging at 19,400, down 135. Tanya, what have you observed?
I think, Shail, there are a few stocks that will be in focus today on the back of numbers, on the back of news. So ONGC, HAL, Power Finance Corporation and Nykaa, these stocks, keep an eye on that, and we should pull up these stocks for you. These stocks will be in focus as the companies will announce their first quarter earnings today. And also Mazagon Dock also reported its numbers. We have been watching that these all defense counters, they have been buzzing off late, and Mazagon Dock posted a net profit of 314 odd crore rupees for the first quarter. So let's pull up that stock for you and let's see how the stock is doing. Okay, it's up 1.5% in today's trading session. And there are some other stocks as well. Torrent Power This stock will be in focus. The company reported a net profit of 532 odd crore rupees for the first quarter. But I want to come to you, Mayuresh, for this entire defense pack.
Yeah.
So we have been seeing that all these stocks from the defense pack, may it be Mazagon or Bharat Dynamics and some other counters, they have been buzzing of late. But what are your top bets from this sector, and is there more steam left, especially after, given the amount of run up that we have seen so far?
So Tanya, again, I think the stocks have moved significantly, and the tailwinds is very much known to the markets. Look at the order books. The burgeoning order books are continuing as we speak and expected to continue. What has really transpired over the last few quarters has been the execution for these companies. So with an increasing order book and visibility in terms of book to bills as far as revenues are concerned, since the execution has improved and since margins have been relatively better, it's a clear case of operating leverage being played out. So one can probably assume that the kind of numbers that they've posted for FY 22-23, they will compound these numbers at a very, very reasonable pace on 23, 24, 25, 26 estimates as well. And because this compounding will happen at a very decent pace, and with the assumption that execution will continue with better margins, the bottom line growth should have an equal amount of growth because there is really little or less leverage onto their balance sheet, which impairs the kind of earnings momentum that we can see. So to that bit, I think the tailwinds are very much existing as we speak. But on the other hand, it's the valuation aspects that probably comes to the fore as well. I think all these stocks have given multi-fold returns 3-4 times over the last few years. And therefore, I think the valuation matrix probably looks a little bit overheated. Any quarter where the number probably misses street estimates by a significant margin because of execution or other issues might see significant amount of profits being booked into the stock. So our sense is that a lot of these stocks are above key pivot levels on the markets with evaluations that we probably see. A better juncture would be that you probably wait for pullbacks if they come. Not really sure when that will happen, but I think that will be a saner approach to do. Anybody holding it has to definitely trail his positions to the nearest moving average.
Right, and this is the absolute right time to also look at the broader performance of the public sector enterprises. Of course, Prime Minister Modi spoke about it in great detail in Parliament yesterday. As you would see, the BSE PSU index is up 30% over the last 1 year. It's been the third best performing index after the capital goods index and the SME IPO index. You can ignore the IPO index. So it's been the second best performer in India over the year to date basis, and things from now on are likely to improve further. At least that is what the message is from Prime Minister Shri Narendra Modi. Let's hear him out.
HAL ने अपना हाईएस्ट एवर हाईएस्ट रेवेन्यू रजिस्टर किया है। इनके जी भर करके गंभीर आरोप के बावजूद भी आज HAL देश की आन बान शान बन के उठ रहा है। आदरणीय अध्यक्ष जी, आप जानते हैं LIC के लिए क्या क्या कहा गया था। LIC बर्बाद हो गई, गरीबों के पैसे डूब रहे हैं, गरीब कहां जाएगा, बेचारे ने बड़ी मेहनत से LIC में पैसा डाला है। लेकिन आज LIC लगातार मजबूत हो रही है। शेयर मार्केट में रुचि रखने वाले को भी ये गुरु मंत्र है कि जो सरकारी कंपनियों के लोग गाली देना, आप उसमें दांव लगा दीजिए साहब, अच्छा ही हो जाएगा।
Okay, this is what Prime Minister Narendra Modi mentioned in terms of how despite widespread skepticism, companies such as LIC and especially Hindustan Aeronautics have outperformed substantially both on the financial side of the business, and as Mayuresh very rightly mentions, there has been phenomenal outperformance, especially of HAL from in the stock markets, including Mazagon and many other defense PSUs. Let's go back to the markets, and in a short while we'll have Sudeep Shah join us from for his technical inputs. But for the moment, 11 points higher, 19,554 on the Nifty as far as pre-open trade is concerned. Let's go back to basics and try and understand which are the stocks which are pulling up the index. So it's likely to be an IT day. HCL Tech is the top gainer, 2.2% higher. But in terms of index heavyweights, HDFC Bank is in the green, 1638. State Bank of India is in the green, 575. Infosys in the green, 0.2% higher, 1392. ICICI Bank flat. Axis flat. Let's look at what Reliance is doing. I can't see it immediately. Reliance is also flat, 25.32. So that's what the setup is as far as the FNO is concerned, and we are waiting for Mr. Sudeep Shah to join us from SBI Capital Markets. What else have you seen, Tanya, when it comes to the pre-open trades?
I think we should pull up LIC as well, Shell, and let's see what's happening there, because LIC standalone net profit also rose multifold to 9,544 odd crore rupees for the quarter ended June 2023, and you can see the positive impact on the stock. The stock is up 4% as we speak. 666 is the level where we are at. Mayuresh, what are your thoughts on this particular counter, LIC?
So Tanya, to a large extent, it's the other income that probably aided bottom line growth. But the company is still struggling in terms of both the gross premiums that we are speaking about and expectations in terms of matching up to what its counterparts are probably doing. So I think you might see a sentimental uptick based in terms of the bottom line growth that we have probably seen, greatly aided by the other income part. But within this pack, what stands out near the pivot levels as we speak on MarketSmith is SBI Life. Relatively better placed in terms of the product mix, relatively better placed in terms of the bank assurance that it has got through the entire SBI network, relatively better placed, in fact, the best place compared to the overall output expenses ratio, including commissions, at 7% compared to 19, 20, 22% for its counterpart, including HDFC with ICICI Group. And on an EV to embedded basis as well, I think reasonably valued compared to HDFC Life or even ICICI Group. So somewhere I think at the pivot level within this insurance players, I think SBI Life probably stands at the pivot as well.
चलिए, जिंदगी के साथ भी और जिंदगी के बाद भी. That's the punchline of LIC. As good a time as any to get Mr. Sudeep Shah in. He's the Deputy Vice President and Head of Technical Derivatives Research at SBI Securities. Tanya is really happy with my punchline. Welcome, Sudeep. We have 3 minutes to markets open. Let's get your 2 picks in before they start clicking.
Good morning, Shailji, and good morning, Tanya. So, see, my first pick would be HDFC AMC. What we have seen with this stock is that steadily from 1900, 2000, this stock has it has moved up to 2500 plus, and by doing so, it is at its highest level post 2022 January. And in the last few days, we have been seeing a good amount of long build-up also happening in this stock with a rise in volumes. Stock is sustaining
recording in progress
moving averages. Also, what we are seeing is in the last 15 days there was one retest of 2400, but that was the 20-day exponential moving average, and from there the stock is picked up again. So what I feel is that the stock is now headed towards 2700, 2730 on the upside, and one can keep a stop loss of 2540 on the downside. My second pick would be from JSW, from metals, that is JSW Steel. Now, this stock is trading at its almost lifetime high, and yesterday also it has closed at its highest level. From the metal index, what we are seeing is that the entire index is ready to move to 6900, 7000 levels in the next few weeks. And the top placed stocks to carry this index higher would be JSW Steel, Tata Steel, and Hindalco. And we have picked up JSW Steel solely because it has given a consolidation breakout. And on monthly charts also, it is a higher top, higher bottom formation. So what we feel is that from the current levels, JSW Steel can be bought with 810 stop loss and 870 target on the upside.
Absolutely. A breakout expected again on JSW Steel today. Remember, yesterday the volumes were substantial on the counter and it closed at a record high. Long build up already seen on the charts, and yesterday's delivery statistics were about 91% higher compared with Wednesday. So HDFC AMC and JSW Steel is what Mr. Shah is punting on when it comes to the long side of the trade today. Just about a couple of seconds left for markets to open. We've settled 11 points higher on 19,550. Remember, 19,500 has been again tested during the pre-open trade, so that emerges as a very strong support. 44,500 on the Nifty Bank, and IT index is up in the green in the pre-open trade, up 83, 30,950. What are the stocks that have traded settled at day's high? JSW Steel, of course, trying to open at 830. DCM Shriram 890. Okay, we have the first moves coming in. Let's shift focus to Nifty 50 immediately. It's open flat, 16 points lower, 19,530. Nifty Bank 75 points lower at 44,472. What are the most active stocks doing? On the Nifty, Infosys up 0.5%, helping the Nifty 1393. HCL Tech, so it's going to be a tech day, 3.7% higher, 1177. Reliance in the red, ITC in the red, and ICICI and Kotak Bank in the red. Let's look at other stocks that in the FNO are trying to help the index up. Okay, broader markets, PSU stocks taking it away. RECL 3.74% higher, 224. Power Finance Corporation 1.2% higher, 270. Who else are in the gainers? LIC Housing Finance up 1%, 430.5. Let's look at how BHEL is doing, 0.5% higher at 100. Cummins showing some kind of a swing trade on the green, 1% higher, 1733. Canfin Homes 0.5% higher, 756. Nifty now down 34 at 19,500. Remember, Nifty 500, Nifty's 19,500 has been tested again. LIC 4% higher, 670. NBCC 4% higher, 4970. Tanya, it's going to be a very, very good day for PSU stocks. Let me just look at which are the top performing indices as far as the broader markets are concerned. Nifty PSU Bank 0.5% higher, 4510, and I would presume that the Nifty CPSC index is the one which is really outperforming. Nifty 19,500 precisely, down 44. Nifty IT up 200 points, 31,067. Let's join in with Sudeep Shah. Sudeep, what do you think as far as Nifty is concerned? Will 19,500 hold?
Shalji, what we're seeing on Nifty is that last 2-3 days the Nifty has been struggling around this 20-day exponential moving average around 19,480 and 19,530 kind of zone. Today this zone is being breached decisively at opening only, and now 19,550, 19,570 zone will act as a resistance. What is more concerning is the bank Nifty is getting a bit more weaker now. So for me, from a rebound perspective, if at all Nifty has to rebound, the levels from Nifty's perspective would be 19,460, which are Wednesday's low. So I guess that level will be very, very important as a reference level. Now that if that level holds, we might consolidate and we might see a rebound. But below 19,460, we are headed towards the 50-day moving average, which is around 19,250. So 19,460 will be the most crucial number for the day. If we go towards Bank Nifty now, what has happened with Bank Nifty in the last few days is that it is straight 8 days where Bank Nifty is now sustaining below its 20-day exponential moving average, and today it has given a breakdown below its swing lows of even I guess 3rd August, which is 44. Uh, 44 280, so we are very close to that levels now. So here, like in Nifty 19 460, in Bank Nifty 44 200 will be the most crucial number. So both these numbers have to be kept on our screen, and if this gets broken, I feel that we should be at least we should start getting cautious in terms of even the positions in mid caps as well as select large caps, which have risen too fast in a very small span of time.
Okay, let's look at stocks that we had discussed, and Mayuresh's top pick was Kirloskar Oil Engines. Fresh record high, Mayuresh, 6.5% higher, 471.50. It was a great stock to pick immediately before markets opened. Let's look at what Indigo Paints is doing. Remember, this is not a high beta stock. It's down about 1560. Not to be worried about. And our two high beta stocks that Sudeep picked up. JSW Steel flat at 826. Remember, consolidating at its record high. And HDFC Asset Management Company. Again, a breakout here, 2624. Great pick here, Sudeep. So four stocks that we had discussed. Fundamentally, Kirloskar Oil and Indigo Paints, and technically JSW Steel and HDFC AMA. It's at 920. Remember, the lower range of yesterday's trade on the Nifty has been tested in the first 10 minutes. We are at 19,494. Yesterday's low was somewhere like 19,470. So we've tested that once. Let's see where it's headed. But it's IT all the way today. KPIT 1152, fresh record high. HCL Tech taking it away, and HDFC AMC, Sudeep's pick. Let's see the graph for this particular stock. 2635. It's the highest that we've seen since 11th November of 2021. So it's about 2 years minus 2 months. So 22-month high. Sudeep, great call there. Any views again?
If you see HDFC AMC, yesterday also and day before yesterday, there was a long build-up happening there. And in the stock, if we, in the last 5 days on the daily charts, if you see, it's forming a higher top, higher bottom formation. Plus, it has broken out of its consolidation post 20th July, and it was a 12 to 13-day consolidation which has been taken out. So I guess after a 12 to 13-day consolidation, when it gets taken out with volumes, the stock generally heads up to the heads up higher, and it outperforms the market. And HDFC AMC, we have seen in the last 2 years, it has massively underperformed. So I feel irrespective of the market right now, HDFC AMC, Nippon AMC, both of these stocks will outperform as a within the sector, and I feel Aditya Birla AMC will underperform. So if we have all these three stocks, Nippon AMC and HDFC AMCs, I feel both these will continue to outperform in the next week or so.
Tanya, what are you watching?
Absolutely, Shail. I think we should look at some of the IT counters. IT index is buzzing as we speak, and we should pull up some of the stocks from the IT sector for you. It's up around 0.78%. So HCL Tech up around 4%, Persistent Systems, LTI Mindtree. Mayuresh, what are your thoughts on IT pack? You know, because the street is divided. I have been talking to a lot of experts, and some believe that the worst is behind us, but some believe that there's still some pain that is left for this sector. What are your thoughts, and any top bets that you have from this particular space?
So Tanya, it's a classical catch-22 situation for IT. I think what has probably transpired in the US as far as the downgrades of regional banks are concerned. Obviously, we know that the pain probably persisted. Downgrades obviously come a lot later after the actual event has happened. But I think the fear factor is that if recessionary conditions play out, over the next few months, and Europe being very, very tight as far as the inflationary conditions are concerned, with rate is expected to go up. Banking, retail, manufacturing, which becomes the backbone for all IT companies in India, and specifically in terms of new order wins from these particular subsectors as well. I think that can be in some sort of a limbo as we head into quarter two, quarter three. Now, what we've seen in the past, and this is just an observation out of the past cycles that we've probably observed, whenever an economy is probably going into a recession or some sort of tightening, I think a lot of IT companies start reviewing their entire order book and their client perspectives in Q3. So I think the fear factor, Tanya, is that if there is some order or guidance change that comes through in Q3, I think second half dynamics, which the street is very, very strongly betting upon, can come under some sort of limbo, and and then the expectations in terms of earnings recovery get postponed to the second half of the next financial year, which means some element of derating that probably happens. So it's a classical catch-22 situation. I think our take is that mid-cap IT companies have performed relatively better. Their order wins and sizes are relatively smaller, which can withstand the kind of pain that companies might go through. But there is equal opportunities for the larger players as well. And therefore, I think a pullback within the mid-cap universe, stocks like Alentia, Mindtree, Coforge, Persistent, if they pull back from the current levels, I think that will be more safer choice because they are also trading in late-stage basis as we see it at markets. So I think pullbacks in some of these mid-cap stocks.
IT tech, Mayuresh?
So
it's hovering around
all of us not only...
Yeah, please go ahead, Shail.
Yeah, Tanya, continue, please.
Yeah, I was talking about KPIT Tech because 3% uptick. Sure. So 3% uptick on KPIT Tech, and Mayuresh, if you see, the stock is hovering around its 52-week high, and it has significantly recovered from its 52-week low of 522 odd rupees. So what are your thoughts on this particular counter?
So I mean, if you look at KPIT, you look at Tata Elxsi, I think KPIT has significantly outperformed Tata Elxsi in the entire ER&D environment within the IT ecosystem. Now they've signed up two big automakers. The management sounds very, very optimistic even in this environment that the order book and the order wins shall continue. Their execution capabilities should be top notch as we speak. They're not seeing any pricing pressures as far as clients are concerned. And therefore, the stock is just zooming off. I think any decline which probably comes through is being bought into, based purely in terms of both the numbers that they're posting and the commentary, which is extremely, extremely strong and positive even in this tough environment. So anybody holding can definitely hold on. As I said, on MarketSmith, it's a late stage base, which basically means two things. One, the stock has significantly moved from a technical perspective, and from a valuation perspective, it's no longer in a zone where I think even a small premium can be considered to be bought in. I think it's significantly trading at a significant premium even to its own standards and the sector as a whole. So any pullback or fresh investments can be a good opportunity in KPIT. Anybody holding can definitely hold on, but you have to trail to your nearest moving average, which is the 50-day moving average as we see.
Okay, absolutely. And Mr. Shah, let's take a quick technical check as well. So the stock, we saw this profit booking taking place in the past few trading sessions, but now a swing, trade in the works, and this stock is of course a market darling, and lots of blocks also happening on it in the cash market. So what are your thoughts on this particular counter, KPIT Tech?
I agree with Mayuresh that this stock has moved up significantly faster or much above the levels that it should have been. But now, given the levels where it is right now, I feel that we should be a bit cautious in having a fresh entry or a fresh buy at the current levels. It might still go up 5, 7, 10%. That's okay. But considering the way the markets have moved and the risk reward that the stock is offering, I feel dips should be used to go long, and rather than not chase at the current levels. And the nearest support which I can see here for this stock would be around 1100, which is the 20 exponential moving average, and which has held well since the last 3-4 months since the stock broke out above 850. So I feel that anyone holding this stock can continue to hold for higher gains or this trying to capture this upside momentum that has been witnessed in the last few weeks. But the equally, it is important to manage the risk and keep a trading stop loss at 1100, which is the 20-day exponential moving average. And a breach below that could at least spell caution and expectation of a correction in the short term. So 1100 for me will be the most important level that I will be watching out for in KPIT Tech.
Right. So, Tanya, it's now about 12, 13 minutes to the trade. Nifty is down 55 points, 19,486. Remember, it's doing two things. It's testing yesterday's low. It's also testing the first support level. And now you probably have a decent dip that has happened. Let's see whether it holds on from these levels or not. Separately, let's look at what is pulling the Nifty lower. And in terms of heavyweights, I think the biggest pain is in the banking space. ICICI Bank down a percent, 954. Kotak down a percent, 1786. Axis and HDFC Bank in the red, down marginally. And of course, the other pain being Reliance and L&T flat, 0.2% lower. The only thing that's helping the Nifty at the moment is Infosys and TCS, HCL Tech, Power Grid, and L&T Mindtree. So IT is the flavor of the day, not to mention PSU stocks. Sudeep, this one is for you, and I am also hoping that Mayuresh will comment. Maharashtra Bank, 3790, deep value. Your view first, please. Sudeep.
Shaji, Maharashtra Bank, BOM has, in the last few days, we have seen a good amount of traction in all these PSU banks. But if we see last 20, 25 days, Bank of Baroda, Canara Bank, all these banks have seen profit booking from higher levels, and they are all trading at least 5 to 7% lower from the recent peaks of the last 2 months. But if we see Bank of Maharashtra, it has not only sustained at higher levels, but it has also crossed its December 2022 highs of 36, and it's marking fresh highs as we are talking. So that is a sign of a tremendous outperformance within the sector also, and as compared to the mid cap and the small cap index also. So I feel, and also if we see, Mayuresh is well equipped to speak about the fundamentals, but last few results which have come, the stock moves are complementing the results, or if we can say vice versa. So it's kind of a low funda pick, and I feel from the current levels also the stock will offer a decent upside because of the delivery markings that has been happening in the last few weeks. And I feel from the current levels, 35, 34, 80 could act as a decent stop loss. It's kind of a positional pick, and we could see levels as high as 43, 45 in the next few weeks on this stock.
Okay, absolutely. And there's one stock, Mayuresh, and that is Maharashtra Bank. Let's pull up that stock for you and see how the stock is doing at this point in time. So the stock is up 4% as we speak. 38 is the level where we are at. Your thoughts on this particular counter, Mayuresh?
So, Tanya, I think we spoke about this almost a couple of weeks back as one of our top picks in the PSU universe. I'll give you 2, 3 interesting facts. Apart from the normal parameters that we speak about, NIMs, which have shown a significant increase year on year, quarter on quarter. In fact, quarter on quarter will be the best parameter for any of these PSU banks. A lot of these banks have shown expansion, but Bank of Maharashtra has shown
इसके बाद चली जाओ मैं उस पे
exponential increase in the quarter gone by. The second element, you look at the loan book size, Tanya, I think it has doubled its loan book in a matter of 3 years. And with the doubling of that loan book, asset quality pressures have come down significantly. The PCR has increased to almost 98 odd percent, which means that with the doubling of loan book, the balance sheet strength with capital adequacy improving and expectations of advances growth expected to continue, risk-weighted assets have actually come down significantly for the bank, both in terms of reported GNPAs, in terms of the restructured book, as well as the provisioning that they're probably carrying on their balance sheet, which makes it the best compelling case for a PSU stock to have the best balance sheet in the mid-cap PSU banks as it's concerned. From a valuation perspective, it trades at around 1.2, 1.3 times, 1.4 times as we speak with the move that we've probably seen on a price to book basis. There is much more to go for Bank of Maharashtra.
Okay, absolutely. Mr. Shah, what about some of the FMCG counters? Let's say HUL. Let's take a quick technical check on this particular stock. So HUL is down and it is actually the top loser as we speak. And we have seen that this slowdown in the entire consumption space is pretty evident. So what are your thoughts and what do the technical charts suggest for HUL?
Tanya, if we see HUL, see what this stock has done is the stock has not only given a bearish sign and the kind of profit booking that we have seen from higher levels around 2750, 2770, right from the second week of July. The stock has fallen more than 10-12% from higher levels. Now compare that to the Nifty FMCG index where the stock index is only down 5% and the stock is the index is still consolidating at higher levels. Here the stock has given a breakdown. So if we compare HUL to the FMCG index, it's a clear underperformer. Now let us just see the individual stock chart here of HUL. Here on daily, weekly, both structures, we are seeing a lower top, lower bottom formation. The stock is not only sustaining below its 20-day exponential moving average, but in the last week or so, it has even broken and sustained below its 200-day moving average also. And continuous buildup of short position is happening in this stock. So I feel it's better avoided from the long perspective, and even on the short side, I feel the stock can retest levels of 2450, 2430 on the downside, where there will be a decent support because last few falls in the stock in March as well as April both have been arrested around 2400, 2430. So I feel that in this round also 2430, 2440 could be guarded, but definitely from the current levels there is a 3 to 4% expected fall. So I prefer that even in FMCG, if anyone has to look, it has to be some other stock other than HUL because this stock would be it will act as a dragger for the index on the downside.
Okay, let's pay attention to where the market is focusing on when it comes to returns. And again, like I said, it's the PSU pack that is taking it away. NLC India, remember this is a lignite miner, up 4.5% at 135.85. IRC TC 3.6% higher, 670. NBCC 49.20 up 3.5%. SGVN 2.9% higher, 55.95. I can go on and on, Tanya. I have 70 PSU stocks in front of me, and I'll tell you, just about 6-7 of them are in the red, and that's a minor profit booking happening. So 65 PSU stocks are in the green. Now comes the most difficult part. Mayuresh, first to you. What are your two stock picks in the PSU sector which might outperform over the medium term? And I'll also request Sudeep to get ready with his picks technically in the PSU space. Mayuresh, first to you.
So one, we spoke about Bank of Maharashtra within the PSU banking space. Our take is that there is much more steam to go, so I'll not repeat on that. And the second one would be within the power space itself, Shail sir. I think NTPC. I think any pullback should be taken as a buying opportunity. 2-3 things are happening here, which is very, very interesting. I think the entire transition from thermal to renewables over the next few years. 2030 target of almost 130 gigawatts, half of which will be covered by renewables. Thermal will still continue its good run over the next few years. And with the capabilities that they've probably got, expecting also mines to start contributing in terms of the captive use, should probably ensure that the EBITDA margins and the reported ROEs remain significantly higher. Add to that, I think, have a look in terms of how the dividend yield probably plays out. EPS, RS rating, top notch on our MarketSmith app, and therefore I think NTPC on any pullback can also be considered.
Okay, so Finance Ministry and RBI, they are jointly organizing G20 Finance Track Seminar on global economy in Mumbai, and FM will give the keynote address virtually. And the CEA, Dr. V. Ananta Nageshwaran also will give a special address at the seminar, which is happening at this point in time. So let's just cut across to that.
A primary focus of the Indian G20 presidency in 2023 has been to strengthen multilateral development banks to address the shared global challenges of the 21st century. MDBs are facing the shared global challenges of the 21st century, but MDBs are facing increasing demands from donor and from borrowing countries to expand their lending operations beyond their core development mandates. However, MDBs are currently not equipped to address this rising demand for their resources adequately. To explore possible solutions that can constructively contribute to the efforts that MDBs are undertaking, the Indian G20 presidency set up an independent expert group on strengthening MDBs. Let me use this opportunity to thank Sri N.K. Singh and Professor Lawrence Summers, who have steered the work of this group adeptly. Volume 1 of their report has been submitted, and Volume 2 is expected to be presented before the fourth and the final ministerial meeting of the G20 finance track in October. The report proposes a triple agenda comprising three crucial recommendations for the MDBs. One, to tackle global challenges alongside their core missions of poverty reduction and shared prosperity. Two, to triple their sustainable lending level by 2030. And three, to enhance their financial strength through capital adequacy improvements and general capital increases. Implementing these recommendations within each MDB's governance framework can significantly enhance their capacity to address diverse financing challenges in the future with a focus on the priorities of the global south. I'm happy that the first panel in today's seminar will be deliberating on this agenda, including the triple agenda recommended by the report. I hope that the discussion in the panel will provide some key insights that can contribute to preparing Volume 2 of the report. Another issue discussed in the G20 finance track is the escalation of debt issues in vulnerable economies, which possess significant economic risks to their sustainable development. The Indian G20 presidency has placed great importance on the management of global debt vulnerabilities, demonstrating a commitment to voicing the concerns of global south. The international community must collaborate and find stronger ways to coordinate debt restructuring for low-income and vulnerable middle-income countries facing debt distress. We have made significant efforts this year in providing momentum for debt treatment for some countries. The G20 also stressed the criticality of addressing debt vulnerabilities in low and middle income countries through an effective, comprehensive, and systematic approach. By restructuring existing debts and enhancing access to affordable finance, the international community can contribute to releasing financial resources in debtor countries to shield vulnerable populations from economic hardships. In this era of technological transformation, unlocking the full potential of digital progress for all is essential for a fair and inclusive future. Despite notable advancements, disparities in access, usage, and quality of financial services persist among vulnerable populations and micro, small, and medium enterprises. Under the Indian G20 presidency, the digital public infrastructure has been integrated into G20 discussions, with member member countries recognizing its capacity to enhance productivity and also to accelerate financial inclusion. The G20 policy and the G20 policy recommendations for advancing financial inclusion and productivity gains through DPI, meticulously developed under India's leadership, have garnered unanimous acceptance across the G20 membership. These can guide both G20 and non G20 countries in harnessing DPI for inclusive and robust growth. We are striving to lay the foundation for a robust regulatory landscape that encourages innovative while ensuring macroeconomic and financial stability. The upcoming synthesis paper developed by the IMF and
Okay, so that was the finance minister for you. But coming back to you, Mr. Shah, and your top bets from the PSU pack.
My first bet from the PSU pack would be SJVN. Sorry, just one sec.
Yeah.
It would be NHPC, because what we've seen with NHPC, the stock has in the last few months it was consolidating of even since October 2022 it was consolidating between say 38 and 45, but post that when it has given a breakout, it has not yet moved too far. So I feel that from the current if we speak from the current scenario also, there is a decent upside that is available in the stock, because a lot of stocks like Ircon, RVNL, REC, PFC, they have moved significantly higher, not leaving too much of a space on the upside from a trading perspective. And the risk reward is also quite skewed over there. So I feel that from the current levels, if we have to pick up something, it can be a stock like NHPC, which can be bought with a 45 rupees stop loss on the downside, and we can see a say we can see an upside around 60-65 on the upside. So, and the second pick would be BEL, Bharat Electronics Limited. Now we all know that how much of a push that the government is giving on the defense stocks, and and procuring the defense, and the defense industry is now on an up move. And technically also we've seen all these BEL, BEML, or HAL, and a host of other names moving in the last few months, and the stocks are not giving up the gains. And so even if it's a day like this when there is a profit booking, or from say last 5-7 days we have seen the indices under pressure, these stocks are still not giving up their gains. So it is in a way signaling some kind of an outperformance. And whenever the index will hold on or stop, or we see this fall stopping on the downside, these stocks will continue start a fresh up move on their own. So I feel from the current levels also BEL can be bought with 123 stop loss from a medium term perspective, for a target of 150 155 on the upside.
Okay, absolutely. Thank you so much for that, Mr. Shah. But now it's time to focus on earnings, and the company on our radar today is Kolte Patil Developers. We have the management with us, and the company posted good set of numbers. 116% year-on-year growth in net profit, and also sales value expanded by 58% to 701 odd crore rupees. We have with us Mr. Rahul Talele, who is the Group CEO at Kolte Patil Developers. Very good morning, sir. And thank you so much for taking the time out and joining us here on Business Today Television. I want to begin with the numbers only. First of all, congratulations, a good set of numbers. What really led to this and to this growth, and how do you plan to sustain this kind of growth going forward, and what's the outlook for FY24?
See, overall, the residential real estate industry is doing good, and there are various factors behind it. There is a strong accumulated savings for the upgrades of the properties. There is a strong desire to purchase the property. On top of that, these are the macro factors. The economy is doing good. The job security is there. Uh, Particularly where we are currently operating. On top of that, consolidation story is also very strong. So affordability is still at the very optimum level for the real estate industry. And about Kolte Patil, see, we are taking care of the customer needs and customer aspirations. So we are understanding the market, dynamics, market intelligence, and based on that, we are offering a product and amenities which are the aspirational for the customers. On top of that, it is backed by a strong launch pipeline and strong launches that we could achieve in last few quarters. So based on that, we have delivered a good numbers, not only in terms of pre-sales, but on a various other parameters as well. So our all-time high business development opportunities that we have concluded around 3,500 crores of GDV. So multiple approvals we have, sourced, multiple projects to the tune of 2,000 crores that we have launched. Sales consecutively more than 700 crores. Our net debt is all-time low. It is just a 17 crores, so which is 0.02 net debt to equity ratio. Revenue recognition is very good.
Right, Rahul.
Yeah.
Absolutely. Rahulji, we'll discuss these in a bit. Let's focus on your stock price. Record high. These earnings have been very, very well appreciated by the market. At about 464, you are trading at your highest level ever. And we've seen a very, very strong rally over the last 1 year, 61% up. Tell us what now from here on. Over the next 2 or 3 quarters, real estate companies are likely to face a lot of demand coming in. Interest rates may also go down. How many million square feet, how many 100,000 square feet are you planning to launch over the next 2 quarters, which is the second half?
So, so for this financial year, we are planning to launch around 7.5 million square feet, which is valuing around 5,200 crores. So out of that, we have already launched 3 million square feet. So balance around 4.5 to 5 million square feet is, lined up for the launches in this financial year itself. So this is the, if I compare a last 4 financial years, so this is the same volume that we are planning to launch in one single year. And based on that, like rightly mentioned by you, the RBI has taken a stand of maintaining the interest rate, and we are hopeful for some betterment in that. So considering that and considering the upcoming festive season, because for real estate, generally Q3 is the strongest for most of the developers. So we are hoping for the positive numbers backed by strong launches. And on top of that, see, our premium products are moving good, and there are multiple launches lined up in the premium uh, vertical for Kolte Patil. So based on that, we are confident of achieving this track record of 700 crore plus on quarter, and yearly, guidance of 2,800 crores of pre-sales number.
Absolutely. And sir, how is the demand scenario looking like at this point in time? Because experts have been saying that there is a bit of, a slowdown that is happening. So are there any signs of slowdown that you are seeing at this point in time?
I don't think so, because the way we are getting a response to our recently launched projects. So within a first month of launch itself, project are either getting sold out, project are either getting, 30, 40, 50% of velocities we are achieving. On top of that, there is a good amount of push for the better price realization within the launch itself. This is very new for the real estate and for us as well in recent times, but we are doing that. So based on that, I don't foresee there is any, demand reduction, particularly for MIG spacious and HIG or premium segments where we are concentrating currently.
Right. Rahul, if you can break your performance over the past quarter in terms of how much in terms of profit and top line Kolte Patil made from the luxury segment, and how much came from the middle income, lower income group. The theme in the market is that luxury is fetching you more money, and there is more demand for luxury than it is for the medium income. How have you fared in the last quarter?
Yeah. So see, in real estate, revenue recognition is linked to occupation or the possession of the property. So whatever that we have sold around 2 years, 3 years back, that is getting delivered now and revenue is getting recognized for those units. But what we are currently selling, for that revenue will recognize in the future. So let me answer from that perspective. So in last quarter, our pre-sales number, the products that we have sold, one third of the product were from the premium category and around 30 to 40% from the MIG spacious category. So 75% contribution is coming from a MIG spacious and a premium segment. In terms of value, also around 80% is getting contributed from these two verticals for us.
Right. Let's look at the stock performance again. And Tanya, this is an interesting data that I'll share with you. Over the last 10 years, Kolte Patil Developers has given a CAGR return of about 22.7% each year. Of course, it's at a record high. And it has, just outperformed the realty index, outperformed the small cap index. So shareholders have had a good ride. Rahul, this is a question on the broader framework. Your face value is 10, and I see that the promoters own a 74% stake in the company from the very beginning of the IPO. Are there any plans to raise funds via QIP or any such format? What is your fund requirement for the next 2 quarters?
So see, generally funds are required for the business development opportunities or for the operation of the real estate. So from an operation perspective, we are confident that internal accruals are enough to address that requirement of construction, which is the largest cost in real estate. And particularly since we are launching multiple projects, we are getting a good traction during the launches. Most of our projects are at RCC stage and getting a good volume. So our free cash flows are going to be significant. So through free cash flow, we are confident to address our business development requirement. So in this financial year, we have already concluded 3,500 crores of GDV worth projects, and going forward, we are confident of closing around 7,000 crores worth GDV projects. For that, in cumulative, we need a cash flow requirement of 500 to 700 crores. So most of that will be sourced through internal accruals. On top of that, there is a good amount of room for the debt. Our net debt to equity is just 0.02, and board has given an approval to go up to 0.5. So there is a delta of around 400 to 500, but we'll be very cautious, we'll be very judicious while raising any amount of debt. So we are confident of raising most of our BD requirements through our internal accruals. And in terms of a QIP, at a right time, I mean, see, QIP money will be utilized for any business development opportunities. At this moment of time, we are confident of addressing our super growth opportunities through internal accruals and debt.
Absolutely. Last question, sir. So the company mentioned that in the current financial year, it has acquired projects with top line potential of around 3,450 odd crore rupees. So if you could tell us about that, and if you could quantify that order pipeline number for us as well.
Yes. So we have acquired around 6 projects. Out of that, 4 projects are from Mumbai, which are the GDV of that is around 2,200 crores. And the rest are from 2 projects are from Pune. So one more interesting thing. So currently we are around 80% of our value is coming from Pune and 20% is coming from non-Pune. So and we are aiming to diversify by another 10% by FY25. So from that perspective, we are giving a push to our Mumbai BD opportunities so that these projects can be launched in the next financial year.
Okay, absolutely. And on that wonderful note, all the very best for the coming quarters as well. And thank you so much for being with us here on Business Today Television.
Thank you. Have a nice day.
You too, sir. So let's get back to the markets now. And 19,500 mark, that is now gone. 78 points lower on Nifty and 253 points lower on Sensex. But it's the PSU space that is buzzing. And Shail, what a bull run we are seeing when it comes to PSU pack.
Absolutely, Tanya. And like I said in the earlier part of the show today, and as we've been emphasizing over the last month or so, the parties in PSUs for two reasons. One, compared to themselves, over a 10-year period, they are extremely underpriced and underowned. So there is a pent-up demand coming in. And compared with the rest of the market, the valuations of PSUs are rock bottom. So when you look at how FMCG, auto, IT, let's forget IT for a moment, but FMCG, auto, real estate stocks have just run away. PSUs offer great value. Now herein comes the kicker. While PSUs are doing well, because they were so underpriced that it made sense to put in a part of your portfolio there, the normal theme has been buy PSUs for a trading bet. That is, when they are extremely cheap, and sell them when they become mildly attractive. So that mildly attractive thing hasn't come as yet. Therefore, you are seeing these runaway gaps, excessive buying, except for the defense pack within the PSU sector, that's gone up phenomenally well. So this is what is happening. The broader markets are partying. The indices are in corrective, consolidative, sideways down move. That's the theme for today. And as Mr. Modi mentioned in Parliament, that money is being made there and you should put in your money in the PSU basket. The market has taken it literally. I want to highlight 12 PSU banks which are just taking it away in the market today. Of course, the Nifty PSU banking index is the top performer, up 2% at 4593. But just look at the data. The PSU bank have about 12 stocks, and Maharashtra Bank, which was discussed both by Mayuresh and our friend Sudeep, is the top gainer, up 4.9% at 38. My apologies, it's not the top gainer, it's the fourth gainer and it's up 5%. So Indian Overseas Bank up 7.5%, Central Bank up 5.8%, Indian Bank up 4%, 5.2%, and then Maharashtra Bank. Similarly, across the board, UCO, PSB, Bank of India, Union Bank up between 2.5% and 5%. So it's an across the board rally, and all small ticket items are just running away. Look at MMTC, 6% higher, 40 rupees. NBCC, 5% higher, 50 rupees. UCO Bank, 4% higher, 28. RECL, 4.5% higher, 226. So this is what I'm trying to tell you, that low ticket, low valuations and under-owned stocks are running away, and they are only represented by the PSU basket. Tanya.
Absolutely, it's the PSU pack, where the actual party is happening at this point in time. And Shail, you explained it really well. And on that note, thank you so much for being with us as always, and happy weekend. So with that, it's a wrap up from me and my team. But don't forget to follow us on our social media platforms like Facebook, Twitter, LinkedIn and Instagram. So stay tuned for all the latest market updates, and many thanks for watching.
We've seen sectoral rotation happening and starting in cement. Anything that you like there in the cash or the mid-cap space or the F&O space, which could give nice short-term returns in, say, maybe a couple of weeks or even less?
Yeah, most of the cement stocks from large cap as well as from mid cap space are showing good traction. India Cement is one of the stock where we are bullish, and we have seen smart recovery from a recent low of around 215 level, and now stock has managed to give breakout on the daily chart of its last 5-6 days consolidation range. So looking at the setup for India Cement, we are bullish and we are projecting target of 238 to 245. One can buy with stop loss of 226. Another cement stock that we like from mid cap space, that is JK Cement. JK Cement has also given breakout on the daily chart, and if you look at the daily setup, it has managed to give breakout of its falling trend line. Now stock is very well